Hey everyone, I'm Charting Man Dan, trader and technical analyst with the Chart Guys. In this video, we're going to check in on the broader market. A lot of volatility today, market reacting to the 30-year bond auction leading to a big drop. Is the top set for now? Are our weekly lower highs being set? I'll let you know what I think. All right, so to the 30-year bond auction, does it really matter that much? We're going to talk a little bit about that. We're going to go into a trade review, but essentially this is the daily consolidation that I was looking for yesterday. I was one day too early, but still a good thing to be exiting profit on longs into yesterday, all out NEE, and knowing essentially not to look long today. And that's something, again, whenever you can, try and get that black and white mindset as a trader of just, if you have high conviction, like I had high conviction, the daily consolidation is coming shortly. And so I don't look long in that scenario because the last thing I want to be doing is looking long for a 15-minute bounce when we're shaping up daily consolidation. And so just a couple posts of that mindset to help ensure that we're, looking in the right direction. I personally will not be comfortable longing things that have not consolidated on the daily the last 4+ days for anything more than a day trade flip. And for me, wasn't even looking for a day trade flip. Bears only. We also had a couple rising wedges that were shaping up. We had a rising wedge in gold. So keeping an eye on gold and silver, gold rising wedge on the 4-hour time frame. And again, it's combining. This is the S&P 500 futures chart on the hourly. It's combining what we know is the most likely scenario, daily lower highs on things like gold and all these other sectors, and then zooming in to the hourly or the 4-hour to find the patterns that indicate that daily consolidation is shaping up. And so is this related to bonds? Absolutely. But, a trader who isn't familiar with 30-year bonds, and that's me, is going to look at today's action and be like, wow, this is a big deal. And maybe it is. But my mindset is this daily consolidation was due. We had rising wedge patterns shape up. We knew the dollar was due for a daily bounce and the 10-year as well. And so it was almost like that, 30-year bond auction. And what I'm referring to is there was a bond auction of the 30-year, and it essentially gave indication that the market is anticipating inflation to remain sticky and rates to remain high for a while. But to me, that was just, it was the 30-year bond auction, just a little push to the price action that was primed and ready for this daily consolidation. So it's the kind of thing where a little bit of news, when the technical setup is there, can lead to that little push that then triggers all the orders that magnify things. And again, it makes it seem like a bigger deal than it actually is. And, you can look at the fact that we did see a bounce retracement of roughly 50%. It's one of those things where it's just a cascading waterfall. And that's why stair-step trades are so beneficial. And so shout out trade review to Jungle Funk Joey. This is what the NASDAQ was doing, just free fall drop. And again, when you get this kind of momentum, it is this perpetuating cycle of stops triggering and shorts triggering positions. And then once the bottom is hit, which is why we use stair-step patterns, then that's the bottom. That often happens. And same thing at the top. If you're just shooting straight up and then you top out, that oftentimes marks the top. And so, this is the difference between a trader and a non-trader looking at this. So here's Joey saying at 214, he's making one attempt at the NASDAQ bounce. I like this for a number of reasons. Giving yourself one attempt, absolutely A-okay. You're trading counter momentum. It's one of your edges playing bounces. And so give it a shot. And so someone looking at that, who's not a trader, would look at Joey saying, I'm going long, and saying, what are you thinking? Look at that risk. It's a falling knife. Meanwhile, the 1-minute stair step at 214 means how much is he risking on this trade? So here's the 214 bull break right here. So he enters long when this 1-minute candle breaks. His stop is right there and probably a little bit of wiggle room. So let's just drag it down a little bit. But that's how much is being risked. And so, again, if you're in the trader mindset, yeah, I'm trying to catch a falling knife, but I'm risking a tiny amount to do so. And so this risk was 0.1%, and obviously the reward ends up being way more than that. The standard play there is, you're not holding for the 0.7%, but the standard play is you exit partial into the initial bounce, and now you're risk-free. You cannot lose. And then you just determine where you're going to take your profit. So that's just the ideal example of, number one, a nice trade, but number two, trader mindset. The risk is very clearly defined. And Joey just did his third part of the webinar series, and that's going to be made public over the weekend. And he goes over the stair-step strategy, which this was. So check that out. All right, back to the charts and the bigger picture. Is this the top? Is this our weekly lower high being set? Absolutely a possibility. The big question from here, number one, what's the financial sector's earnings reaction tomorrow and to start next week? That's going to play a major role, but it's the same thing that we've known for days. All right, whenever we top out, all the weaker sectors, do they confirm daily uptrends to show us that the weakest names are going to now start helping the bulls? Because we know the lead big bulls, Amazon, Apple, NVDA, they haven't needed any help. Google, Meta, 52-week highs, have not needed any help. The help has to come from the weaker sectors. So the question is, does the S&P 500 into next week confirm a daily uptrend? Does IWM, does XLV, does XLF, do these names confirm daily uptrends or not? If no, then our weekly lower highs are set. If we confirm the daily uptrend, the weekly lower highs are not set, and the probability of a monthly bull flag increases a bit more significantly. One thing to note with the NASDAQ names, again, it's just a handful of names that are keeping things strong here, but you will oftentimes break them up into pairings if you're watching the NASDAQ, where Google and Meta are on one side and Apple and Amazon are on the other. And Google and Meta trade hand in hand often. It's not a coincidence they're both hitting 52-week highs together. And then Apple and Amazon trade hand in hand often. And so yesterday it was Meta and Google leading the way up, and then we have intra-sector rotation, and today it's Apple and Amazon leading the way up. Apple clearing 180 and closing above it, great sign for bulls. This was a very stubborn level on the way down, and we've got tons of space for a higher low to try and form on next consolidation. What bulls are hoping for is that the weekly uptrends confirm to try and set up weekly inverse head and shoulders for monthly higher lows. And Amazon, again, acting as our laggard. Most of the big tech names broke bull here, and Amazon was a bit behind. But anyways, it's got to come from the smaller sectors. Semiconductors holding on extremely strong. We're watching for the weekly lower high, but again, it's not, bulls don't need help from semiconductors. They're doing everything fine. We're 6% from all-time highs in SMH. And what do we need to hit the low from a couple weeks ago? 8% drop. Again, there's these, I like looking at percentages like that. And look at the NASDAQ here. We're watching this 2-day downtrend resistance line rejecting the price. But I like looking at percentages just to know, it helps me know psychologically what would have to happen in markets. So, for QQQ to hit 20-month highs, 22-month highs, we need 4.5% and 4% from the high of today. And what do we need to hit the low of 2 weeks ago? More than that. We're closer to 22-month highs in the NASDAQ than we are to the low that we just came off of. So burden is on the NASDAQ and semiconductor bears. Burden is on IWM, XLF, XLV bulls. So NASDAQ, we're looking for a daily higher low to be the result of consolidation. The big question into tomorrow is, can bears confirm hourly downtrends? This rising wedge bear break lost the hourly uptrend. Do we now confirm hourly downtrends? So all these names, Amazon and Apple and NVDA, bears have to confirm hourly downtrends. We lose the hourly uptrend. If we're going to pull back on the daily in any meaningful way, we have to confirm the hourly downtrends. Burden on bears in those names. Tesla, daily consolidation underway, inside bar bear break. We're watching for that weekly lower high again for a while now, just looking at the equilibrium and looking at when earnings are. We can confidently say we're probably going to wait for earnings before this range breaks, which is a shame because it's a beautiful range. And I hate when beautiful, clear patterns see breaks on coin flip earnings, but that's what we got. Healthcare, daily consolidation clearly underway. Can we shape up a higher low within the next day or two to keep a daily trend change on the table? If we retrace 50% plus on this drop, we're going to be looking for an equilibrium. That's the third scenario. There's only 3 ways this plays out on the names that are bouncing here and have to prove it to bulls. We drop to lower lows. That's only going to happen on increasing bear volume. We confirm the daily uptrend, or we tighten up into an equilibrium into the end of October. XLF, earnings are going to determine whether we confirm the daily uptrend or head back to the low. IWM, very weak today, and that's due to growth names. Because I can look at XLF and say, well, it wasn't that weak. And IWM, the largest holdings, we know the largest sector is financials, but you go to ARKK to check in on growth and say, yeah, we gave back most of the bounce. That's where the weakness was for IWM today. And so, again, heading back down towards support. IWM is most likely to break support out of any of the sectors we're looking at because they're the biggest red name today. But we have to keep in mind that financial sector earnings are definitely going to impact IWM. NEE, double top at daily resistance, which we topped out at last bounce attempt. We'll see if the bears can confirm daily consolidation is underway. I will be interested in looking to potentially reload some for a daily higher low, knowing we must confirm a daily uptrend for the weekly oversold bounce to get any follow through. MSOS, cannabis name. So I'm starting to get interested here. I've been nibbling a bit. And what has me interested is, number one, I like the volume. The last thing the bulls would want to see is a slow bleed here with no volume, showing no interest. This is high volume, showing a clear battle is going on. But I'm watching for the falling wedge, just like the falling wedge on CGC played out. No real follow through there, but it was a 12% move. And MSOS, this is an hourly falling wedge. And so every time we dip under 7, there's some decent volume buying that dip. And we have a wall of resistance here between 728, 732. Bears defended resistance today. And so again, it's just a high volume battle that is going on right now. And it's a battle for weekly EMA 12. And so it's going to get interesting the next couple of days to see who wins this battle. Burden on bulls. Dollar, bounce underway. We knew this was coming because we knew that the bears have to confirm a daily downtrend if they're for real. And last time around, they failed to do it. And so now we're looking at this and saying, uh-oh, here we go again. And again, this is one of the puzzle pieces where if the dollar heads straight to a V-shaped higher high, that increases the probabilities that XLF and all these sectors will fail to confirm daily uptrends. If they're going to confirm daily uptrends, this has to be a head and shoulders. And look at the 10-year. Daily bounce. We knew this was inevitable because if this pullback is for real, we have to confirm the first daily downtrend in months. We're going to get a ton of information the next 3 days gauging this consolidation and determining probabilities of whether these are weekly lower highs or not. Oil, trying to set the daily higher low, but not doing so just yet. Checking the energy sector, tightening up, low, lower high, higher low, maybe another lower high, 4-hour equilibrium on energy. And natural gas, tightening range after that V-shaped bounce, not surprising. Looks like we had a bit of a fake out on the inventory report reaction because that was a 4-hour equilibrium bull break, but failed the highs. And so daily consolidation still underway with the inside bar, no red flags. Simple statement, if daily EMA 12 is support, bulls are just fine on this uptrend. All right, keep an eye, know where the burden is needed. If you're looking for weekly lower highs, you got to see these big names roll over. If you're looking for daily trend changes, you got to see the weak sectors change the daily trends. Appreciate you all watching. Do good things. Have a great Thursday.